Welcome to Herron Todd economic and property market update for July. Australia's economy continues to slow, with weaker growth, softer confidence, and a cooling housing market, creating headwinds for households, businesses, and property investors. While Australia's economy grew 2.5% over the year, momentum has clearly slowed. Productivity fell 0.6% during the March quarter, and it remains around pre-pandemic levels, highlighting the ongoing challenge of lifting the economic performance. The labour market is also softening. Unemployment has risen over the past year, job creation continues to slow, and vacancies are declining. Although employment remains relatively strong by historical standards, higher interest rates are clearly beginning to impact business activity. Inflation also remains well above the Reserve Bank's target, with housing, energy and services continuing to keep price pressures elevated. The Reserve Bank meets again in August, and despite holding rates steady in June, further rate increases remain a distinct possibility. July also saw the federal government legislate its changes to negative gearing, capital gains tax and SMSF lending for residential property. These reforms are expected to reduce investor demand, weigh on confidence and encourage greater interest in higher income property assets such as commercial real estate. Confidence remains weak. Consumer sentiment, business confidence and business conditions all remain well below their long-term averages, while new dwelling commencements and completions continue to fall well short of the levels needed to achieve Australia's Housing Accord targets. Australia's housing market has continued to lose momentum. According to Cotality, dwelling values are 7.3% higher over the past year, but growth has slowed sharply. Values have increased just 1.2% during the first 6 months of 2026. They've fallen 0.7% over the quarter and declined by 0.4% in June alone. Capital cities continue to weaken more quickly than regional Australia. Sydney, Melbourne and Canberra all recorded further price falls during June, while most regional markets remain comparatively resilient. Activity is slowing as well. National sales volumes are 9.7% lower than a year ago. Capital city sales are down 16.2%. Median selling time has increased to 41 days, and buyers now have more choice with 69,247 new listings and more than 248,000 total listings available nationally during June. Rental markets remain the standout. National rents increased 5.9% over the past year, driven by ongoing population growth, limited housing supply, and persistently low rental vacancy rates. As always, national data only tells part of the story. Property markets continue to perform very differently between regions, asset classes, and price points. That's why Herron Todd Month in Review remains an essential resource, delivering local intelligence from Australia's largest network of independent property valuers. Looking ahead, we expect softer housing market conditions to continue as higher interest rates, weaker confidence, housing supply challenges, and recent tax reforms reshape buyer and investor behaviour. We'll continue to keep you informed each month with the latest insights from across Australia's property markets. Thank you for watching, and we'll see you again next month.